Looks like it all worked. Fantastic. Thanks for your patience. All right, let me get the character and we'll get going. Thank you for the sound test, CJ. Hello, what today is Thursday, April 9, 2025. This is the weekend charts. Let me check the screen share. All right, fantastic. Obviously, I want to thank all you guys and girls for attending. My apologies for getting the word out on the show and getting the wrong times and everything mixed up. I keep saying I'm gonna fix all that, and I just get so busy with everything else. Usually working on the show. So 10-1, that should be 10-9. In fact, a lot of this will not be relevant today, but we'll definitely talk about the current market conditions. I want to talk about the missing piece to trading, and this week it's going to really be vital. I want to touch upon an ogre and sticking with trends and a whole bunch of other stuff, and then I actually have a mind to trade this week. And I want to talk about the one thing that you have to do. This is disclaimer screen. As you know, you can lose money trading. Or, off to sum it up, all predictions are about the future, and a lot of stuff can happen between now and then. There's all my contact information. Obviously, feel free to shoot a screenshot. You can also reach me at dave@davelandry.com. We have a really good Facebook group. I absolutely love it. I get a lot out of it. It has made me a better trader. The group is free, but you have to be a member of davelandry.com. You have to at least be a gold member. So it's free, not free. As I've said ad nauseum for the past few months, when I first started trading, the missing piece was being able to see other traders trade successfully. And I became part of a hedge fund eventually, and then I also was doing some programming and consulting, and eventually some ghostwriting and stock picking behind the scenes for another trader in particular. And seeing him trade really, really, really helped me out. So everything I do, I used to say 20 years, now it's 20 something years. But everything I do is thinking about that me going back 20 something years, 25 years, and that feeling of being a little lost out there. And all these gurus, they show you a big, beautiful trade, but they don't show you what happens in between and how many other trades that did not work. Anyway, enough about the other gurus. Let's talk about the mystery charts and the methodology in action. So the thing is to actually show the setup, show the entry, show the stop, show the initial profit target. And then in a lot of cases, I'll grab the trades out of my model account and show you that I actually took the trades. Anyway, this was KYTX. The mystery charts are taken directly from my trading service, usually, I'd say 99% of the time. And I show them here, and you can get them live, obviously, through the trading service, davelandry.com/trading service. You can see the archives on YouTube, youtube.com/Dave Landry, and you can get the older archives going back years and years and years at davelandry.com/webinar. But anyway, so this one triggered before I could show it to you here. So anyway, it's a nice Landry light, meaning that the lows are greater than the moving average. And I tell you, that Landry light thing is a wonderful thing. And usually I don't use a lot of indicators, but I will occasionally take a look at this just because it's such a good illustrator of trend. The indicator doesn't indicate anything. It just sort of helps to see what's happening. And if you look at the chart too, you can say, okay, we've got nice Landry light again, meaning those lows are greater than 30 EMA. Great little trend indicator. And it's accelerating higher. You've got a gradual trend, all of a sudden begins to take off. That's what I call accelerating momentum strategy. And then you're looking for a pullback afterwards. And we have all those things happening here, obviously. So this is what was recommended down here, KYTX. Now, 24% stop, that's a fairly liberal stop, but that's what this setup called for because it's so crazy. But anyway, entry was there, stop is way down here, initial profit target is up here. Now let's take a look at what happened. So yesterday, it just absolutely took off. And I think it was about 10 cents below that IPT or whatever. And I took partial profits, and a lot of my clients took partial profits. And that's why I went into Facebook and said, look, guys, just start thinking about taking these partial profits a little early, because you have to think about the sustainable speed of money. Okay. Things can only move so far so fast, and then they run out of gas. And in this particular case, you have to ask yourself, okay, how far is this thing gone? How close is it to the IPT? And then the other thing you need to think about too is that the first loaf of the trade, the first half of the trade, you're getting that swing trade profit, okay? And that's not where the real money is. So let's say you're looking for $1,000 and you get a situation like this, and you're able to pull $800 off in one day on that first loaf, but you still have a position that has the potential to make a lot of money on the second loaf. I'm going to show you one in a few minutes based on the model account, and that's what we're working off of today is a model account, although I do take these trades in more than one account other than the model. But the point I'm trying to make is on that second loaf, we've got one, knock on wood, come in, I need a new joke, but we have one, I'll show you in a few minutes, that's up over $9,000. So that's obviously a good thing. And that's where the money, that's where the real money is in those longer term trends. The shorter term swing trades, like you see here, you know, getting in here and getting out later that day, this is an ideal situation, right? Where you get out one day, or even a few days later, or even sometimes a few weeks later, getting out half. That helps to keep the lights on. That helps to keep you in the game. That helps to put a little money in your pocket. But one thing, you can't really look a gift horse in the mouth when it comes to a situation like this. So what I did below is I plotted the high minus the low. So yesterday's action in this trade was the widest range bar in like a year and a half, okay, or at least a year. And if it wasn't for this one other bar here, it was probably the history of the stock. So this is probably the widest range bar in the history of the stock, or darn near close to it. So if you're on the right side of a move like that, that doesn't come along every day. So you have to be cognizant, obviously, of that. So how far did it move? How fast did it move? And how close did it come to the initial profit target? And those are the things that you have to ask yourself. And I consider yesterday's trade a gift horse kind of trade. And I know a lot of you guys took some partial profits on that. And kudos to you. It's for me, to make money on a trade is exciting, but I actually get more excited when you also make money on the trade. It's a great feeling. It's kind of hard to explain, but other than it just feels good that other people are profiting too. So you can see, again, widest range possibly ever in this stock, or darn near, and that happened. You happen to be on the right side of that. So that's a gift horse type of trade. Remember, you still have that second loaf on, and you could possibly make 10 times the amount, or 20 times the amount, or 100 times the amount. Doesn't happen that often, but it's possible on the remainder. Now, the other thing, just real quick, and it's something I'm thinking about as I'm going live here. A few of you guys said you missed it because of the fast move, and I nearly missed it too, because I didn't have an order in place, and all of a sudden it began to take off. And the old me, okay, the me without responsibility of accountability through my trading service, okay, the old me would have said, well, let's just see what happens, and then watch it take off without me. And as I told one of my clients who missed it, it's like, because I knew I had to be in it, it was like this force came over me. It's like a close my eyes and buy type of situation. I'm glad I did. I got it a little late, but I was still able to pull off some decent profits intraday. So I guess the point I'm trying to make there is, you want to commit to commitment devices. If you're supposed to be in, then by all means get in. All right, so let's take a look at some of the recent trades. This is ABCL, and you can see it triggers an entry. The entry is here, the stop is here, initial profit target is here, and it triggered and just kind of died out. And as I've been saying for months, this stock for what, 2 months or so, maybe longer, was dead money. You were either underwater, or certainly not making much money. But you never know for sure whether or not dead money is truly dead money. Dead money is one of those in theory kind of things. And what's the old saying? In theory and practice are the same. In practice, they are not, or some sort of, that's probably a bastardization of it, but you get the idea. The map is not the territory. So it would be great to say, okay, if you're not profitable, then get out, because you never know how it's going to work out. If you're not stopped out, stick with it. And it doesn't always come back. And I'll show you one that didn't in a little while. But anyway, you bank 1,000, that's per 100K in the model account. Now, in this case, I looked at the trade. I only banked 850, and two things happened there. Let's see. I don't know why, actually, now that I'm thinking about it. I got in a little late on this one for some particular reason. So I just told you about all this discipline. I think I used discretion on this entry, if memory serves, here. And then I re-entered it later when it began to take off from the little base that was in, just because I knew I had to be in the trade. But anyway, so there's 1,030 open as of the time that I took this snapshot. So far so good. So you banked 1,000, you have 1,000 open, and I hate to use the word hope, but hopefully through the free roll here, okay, once you get to break even, you're kind of, and I hate to use this term, but I can't think of a better way of putting it. If somebody could tell me a better way of put it, then maybe it'll help, because it sounds like gambling, but you're playing with the market's money, so to speak. But there is something that's valid in saying that, because you don't want to mentally monetize the money. You have to say, okay, if I stop out, barring overnight gaps, of course, at break even, then I made $1,000 on this trade. That $1,000 is already in your bank account, okay? So that's a good thing. And then being able to just, I know sometimes it's a lot easier said than done, but stick with it for the remainder of the trend. So anyway, no longer a dead money situation. Now we have a smoke 'em if you got 'em report this week, and this is actually a new one, not discretion. This actually hit the initial profit target, unlike the KYTX, which I strongly did urge everyone to go ahead and not look that gift horse in the mouth, as we discussed in the Facebook group. But anyway, so this was another one that was on the service. I think it was a mystery chart. You can see it's in a nice little trend, and then it begins to accelerate higher. And notice that entire trend you had Landry light. Again, lows greater than the moving average. That Landry light thing, the more I look at it, the more I like it. And that all came from an article I wrote back in 1995. I think it was published in early 1996 in Stocks and Commodities magazine. That was a 220 EMA breakout system, in case you want to Google it. It's I don't know if it's technically in public domain, but it's been reprinted so many times on the internet. You can find it out there. Anyway, a little TKO type of move, also a pullback, looking pretty good. Not quite a Landry light pullback to the 30 EMA, but a decent looking TKO nonetheless. So you can see there's the parameters down below. And based on a 100K account, you'd buy 500 shares. Based on the volatility of it, you have a fairly wide stop, so your share size comes down. Now, I'm going to show you probably maybe later in this presentation, or at least next week, I'm going to show you one that's crazy volatile, that has a stop that's just ridiculously wide percentage-wise. But if you look at the chart, it's not really that wide, okay? So you have to adjust to the volatility of the market you're trading when it comes to stops and your initial profit targets and trailing stops. A lot of people get caught up in that. I've done presentations in the past where it's like, well, I can't use no 30% stop. It's like, well, you don't get no Coke, or like they said at Caddyshack. You ever go watch some of these old movies? They're not as funny as as you thought they were. I'd like to go in and watch the old Naked Gun. I watched the new one, and it's a long run for a short slide, but every now and then there's some serious laugh out loud moments. Maybe drink a couple beers before you watch it. But anyway, stop is down here, initial profit target is up here. And you can see kind of a slow start, but it did eventually get going. And then it just kind of barely hit that IPT yesterday. So in a case like this, you bank 1,000 and you got a little less than 1,000 open at the time of the snapshot, obviously. Now, this was a gold stock that's set up back in, when did it set up? Way back in May. You can see nice little Landry light pullback. You know what's kind of cool is, and I know you want to party with me, but as I was putting together this presentation, that's the old saying, watch one, do one, teach one. if you want to learn how to do something, the more I teach, the more things I see in the charts. And a lot of these charts had some pretty decent setups coming into prior to the setup that we ended up taking. But you can see it did rally up, pulls back orderly, took off, pulls back orderly. Now this one was dead money for a little while, and we'll get to that in 1 second. So there's all the parameters down below. And again, you can get those through the archives. Entry, stop, IPT respectively. Again, you bank 1,000 per 100K. Stop comes to break even. Now you're free rolling, okay? And believe me, it's hard to sit in and wait and wait and wait and wait and wait when 2 months ago you had a lot more money in open profits than you do now, okay? Or do then, I should say. But follow the plan is the thing to do. And again, it's a lot easier said than done. The map is not the territory, yada yada. But anyway, the trailing stop, and you'll notice it's not exactly the scale, but what the theory there is to slowly and gradually let it open up to adjust to a couple things. If you get it right, and this is going to make a lot more sense when we get to KTOS, but as I preach nearly every week, if you get it right with your trading for the swing to intermediate term trade, as it turns into the intermediate term trade, you become a longer term trend follower, and you're beginning to adjust to that longer term trend following type of stop where it has to be really, really wide. And I know I'm sick of myself hearing it, sick of hearing it myself, but pure swing, pure, let me rewind that, pure trend trading, you're going to be right about 27% of the time. And that's a pretty miserable statistic. But if you can take the swing trade, okay, and take some partial profits there, you get a little bit closer to 50-50. And in good markets, knock on wood again, you can get a lot better than 50-50. Maybe you can get close to 65 to 70%. If I'm hitting 65% on my trades, winners that is, I'm doing unbelievably well. But that means that 35, 45% of the time you're losing money. And the neurology of that is that's a lot more painful than the making of money, as I often preach. And that's a problem that a lot of people have, present company included, with trading, is that the negatives are so much bigger than the positives. And I forget the gentleman's name. If you go back in a couple presentations, you'll see I talked about it. But his theory is it's like Teflon and Velcro. The bad is the Velcro, and the Teflon is the good. It just doesn't stick. It doesn't leave as big of an impact. Yesterday was an amazing day for me, as it was for some of my clients. I talked to a few of you guys directly. And today I'm getting whacked a little bit, and it's like it kind of hurts, and it's not, it's like 1/10, getting whacked for like 1/10, if that much, of what I made yesterday, but it hurts, okay? And that's just the reality of trading. And that's one thing that eventually I want to get into is the nuances and the pain of the nuances, okay? For instance, like back here, we've talked about dead money, okay? Getting this thing and making a little money for a day or two and then being underwater for a week or so is quite painful, okay? And then that's going to tip you to stop the pain. We from the caveman times, we want to avoid pain at all costs. And if you're not stopped out, but that little stock keeps going down like a little bit day by day, it becomes like a Chinese water torture, and you want to stop the pain. And there's nothing you could do to stop from feeling that way from a neurological standpoint, but you have to power through it. And that's where, not to get too far on the fringe here, but that's where commitment devices make a lot of sense. And the way I started working out, I tell a story every week about, or often about, a trader friend of mine was getting a little pudgy, and he decided he was going to work out at all costs. And this guy is very disciplined, but he was worried he wouldn't be super disciplined about going to the gym. So he paid for a younger guy's gym membership who was buff and ended up working out. And he also told him, pick me up at 7 o'clock every morning if you don't see me on that front porch swing at 7 o'clock, I'm going to pay you $20 for every day you don't pick me up. And that was his commitment device. My commitment device became working out with a couple of friends of mine just right around the block. This friend of mine has a bonus room. They invited me to work out with them. And if I didn't show up because I was lazy or something, it's like they would rip me a new one. So it's like I felt like I had to show up. That was sort of my commitment devices, which I'm very thankful for him. COVID kind of mucked things up a little bit, but I eventually got back into an actual gym, and I go 5 days a week, almost religiously. Rarely do I miss a day because I know myself. I start missing, and then it gets 1 day becomes 2 days a week, et cetera, et cetera. But anyway, long story endless, I do have a really good friend group there. A lot of slightly older gentlemen that I'm really good friends with, and we kind of jaw jack a little bit every day, and so it makes it good. So you have to figure out what your commitment devices for trading are going to be. One of my commitment devices is I have to mimic what I say I'm going to do in the service. I'm telling you to do it, then I need to show you that I'm actually doing it myself, and I'm actually making money when there's money to be made. I'm actually losing money sometimes too. You'll see that in 1 second. But you have to commit to what you're doing, and then you got to figure out what your commitment devices are going to be. So let's say you're missing entries on trades. Well, you're going to put in a hard stop to enter the trade when you need to get in. Earlier today, I was worried about missing one, so I sent like 3 alerts on it. NUAI, which is college fund worthy, by the way. That's a joke. But I sent like 3 alerts, and then after the second or third alert went off, I said, Dave, you're farting around here. Put in a hard stop entry order. And the reason I don't use a hard stop entry order from the get-go is I do like to use a little discretion on my entries. And sometimes on the exits, like I just showed you on the, whatchamacallit, KYTX. Anyway, again, we're adjusting to the longer term volatility with the trailing stop, and we're letting that widen out. Okay, so we're going to a longer term volatility, and if you do it right, again, the volatility increases, and as price increases on the long side, right, as price increases, your point move increases too. Okay, so the stock is going to need more and more and more room, and that's why we give them more and more room and then kind of hold on for dear life. Now, as I alluded to a few minutes ago, or talked about a few minutes ago, the sitting through the drawdowns and like what to expect with these trades, like back here again, you're a hurting pup right here. 2 or 3 weeks in a trade and you're losing a lot of money, and that's really tough. And that's why markets, I think that's why markets are always or impossible to find a holy grail. There is no holy grail because that human nature never changes. And the holy grail, if there is a holy grail, is being able to embrace that human nature, because you can't change it. Okay, it's down to a neurological standpoint in a lot of cases. But being able to say, okay, this is a normal feeling that I'm feeling. I'm just going to put that hard stop in if I have to, and I'm going to go about my life. And as I've preached before, busy traders make good traders, especially right now, okay? If I keep myself super busy, all these position trades, at least right now, because everything's blowing and going, again, another knock on wood, but if I keep myself super busy, I'm not in and out like the rat going for cocaine, which we'll talk about in a few minutes, doing stupid little day trades and wasting my money. I'm just riding these longer term trends. But anyway, stop widens out over time, and we have 3105 open, and that's on, again, a hypothetical 100K accounts, but I do take these trades across more than one account. All right, KGC, this is another one of those golds, okay, 1,000 shares. And here's the beauty, it's like when you're getting these things at low levels, okay, and they run 100% or so or more, then all of a sudden your position size is, you've got such a big position early on. Like you might not come in and buy 1,000 shares like today, because that's $25,000, right? But when you got into this, it was $14,000, which is still a lot of money, but that's a lot more manageable than jumping in with this huge share size, okay? And then, of course, you're taking profits along the way, so that actually decreases. So your risk is still down. I mean, if stopped out, it should be a profit, but you're taking the risk off as you go, because that risk is actually increasing as far as the exposure of money out there. And that's another thing too that we need to get into at some point in time. Is open profit drawdowns, and I've talked about that before. That's something that you just have to live with and deal with, and it could be really painful. And if you're going to mentally monetize, try to mentally monetize to where your stop is and say, okay, if I get knocked out of this, this is how much money I should make on the trade. And then each day, or when, not if, but when it does move higher and you're bumping that stop higher, then you can mentally monetize to a bigger and bigger profit number on that. Anyway, KGC, trigger way back here. And a lot of these, as I'm going live, they don't look like these great trends way back in the chart, but they were. If you back the chart out, if you go back and watch those shows, and here's the beauty of this too, okay? Here's another one of these show me things, and it's not me. We're in a bull market for now, knock on wood again, a lot of knock on woods today. But you can go back, at least with this last run, okay? You can go back to May and watch the weekend charts from May, and I'll show this. I've shown it back then, at least as a mystery chart back then, so you get to see it all unfold, and that is vitally important. And that's, again, the missing piece. I can't emphasize how important that is to have that missing piece out there. But anyway, entry, stop, initial profit target respectively. This was yet another dead money. I mean, you were above water, but this thing went 1, 2, 3, like 4 months, okay, with not a lot of progress. And it's hard, again, to stick with it. But here's another cool thing, and I know I'm a nerd. Notice that it never had any Landry light below that 30 EMA. That was just a big old consolidation getting ready to launch into space. The bigger the base, the bigger the launch into space, as I thought I came up with, and I thought it was brilliant. And then somebody pointed out, Dave, that's Ralph Acapora, who's a super nice guy. He's a trip. We shared a cab. Spent a little time with him at ChartCon. He's a really nice guy. Anyway, banked 1,000. What happens once you hit your initial profit target? Stop comes to break even again, and then you let that stop gradually open up over time. So this last little blip up here, it should be a straight line going out, okay? Because you only move the stop when the stock moves in your favor. I know I say a lot of these same things over and over. 49.80 open on that one. Mr. Waddles once said, there is abundance of opportunity for the man who will go with the tide instead of trying to swim against it. I don't know if it'll show on camera, but maybe I could just throw a picture in later. I printed uptrend and downtrend and sideways on my arm to remind me which way the market is headed. I hold my arm up to the screen and I check out the screen to make sure I'm not fighting the trend. Now this is Katos. This was a former mystery chart, obviously. And you can see it was in a really nice trend. Again, these trends are a lot more impressive when you back the chart way out. Has a Landry light pullback. That's simply a pullback to the moving average after you have 10 to 20 bars of Landry light. Always look at the chart to make sure it's persistent and trending and trading cleanly and all those things I preach about day in and day out. But you can see Landry light goes down to 0. That means it's touched the moving average. There's your parameters. So the entry is there. The stop is right here. The initial profit target is right here. This one worked out fairly well, fairly quickly, although here's the thing, another map is not the territory thing. If you were walking through this bar by bar and back testing, you'd be like, oh, okay, yeah, it's up and triggered. Okay, bam, 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 bam. But if you're actually living through this, it's like triggers, oh, we're doing great. And all of a sudden, 1, 2, 3, 4, 5, like 6 or 7 or 8 days, you're barely making money or possibly losing money, and that's trading day, so that's 2 weeks. So it's a lot harder to sit on your hands for 2 weeks or 3 months like that other one while you're underwater. But as long as your stop is not violated, that sounds kind of nasty, then you're okay. You want to stick with it. I know, easier said than done. So $1,000 is banked here, and then that stop goes to break even. Okay. And this is what I was talking about earlier. At the time of the snapshot, at least, this stock had ran 150%, and you have 92.57 in open profits. And so that trailing stop has been trailed higher over time. Now, keep in mind, when, not if, this trailing stop gets hit, I hate to use the word hope, but hopefully 10 years from now, okay, you're going to give up a shit ton of open profits in the end. But you already took half your profits off. You're already playing with the market's money, so to speak. Again, I need something better to say for that, but I think that works. And then, of course, you're going to lose some money in the end. And as I preach quite often, I need some new material, but everything is so relevant and makes so much sense, it's worth repeating. But as Dennis said in the Turtles program, he was okay with open profits drawdown because that comes with the territory. Okay, you're going to have open profits drawdown. Now, if somebody let a stop get blow through or whatever, they probably got fired. But in a case like this, you got $9,000 open in profit, and you stop out and you get 7 or 8 or 6 or whatever the case may be. He's okay with losing that $3,000 in open profit drawdown. Okay, you probably lose about 20 points on that, which is kind of scary. But this is the goal: is to try to stay with this as long as possible. And by the way, it's like you could argue, like, okay, Dave, this was kind of a theme play because all the wars and shit going on in the world. I'm going to buy some defense stocks. Well, it doesn't always work like that. Okay. But defense stocks were breaking out to new highs. They were looking pretty good. And, trying to ignore all the news because that's going to help you build the case. And that's something you shouldn't use. That's evidence you shouldn't use to help build the case. It's like, you know what? This chart is there. Let's see what happens. And so far, it's played out. Anyway, here's another one, ATAI. This one actually hit the IPT and after hours trading. I did not take, I always get up early, and I saw it in early morning. I was like, oh, okay. And I was trying not to go digital. I try to stay analog. I have a tablet, which is analog. Okay. Actually, handwrite on this is remarkable too. I love it. Absolutely love it. And I try to stay analog as much as possible, but I do check in. I do find myself checking in at least once on the phone to see what the stocks did overnight, especially now. And I saw it was up tremendously. And I was just thinking, okay, I'm going to come into the office when the market opens. I'm going to ride the trend. I'm going to try to squeeze out some extra profits intraday, use a little discretion. And by the time I got to the office and got around to doing it, then I'd given up that open profit. So I guess that's a lesson to not look at a gift horse like that in the mouth, especially on something that's super volatile like this. Anyway, I last 2 weeks ago, I did a presentation where I showed where one client was emailed me and telling me that he was using those limit orders in after hours. Entry stop, and you can see that reversal bar here is where it was way up here in after hours before it came back down. But it was so far past, at least when I looked at it, it seemed like it was a ways past the initial profit target. So I figured that I was good to go, but didn't work out. But anyway, again, we're going to let that stop widen out a little bit. Usually I trail a stop a little bit more closer to a 1-for-1 basis on the first low, so to speak. But in more recent times, I have been letting that loosen up a little, but not a lot. Okay, so you play kind of close to the vest early on because the stock hasn't proved itself at that point in time. But over time, if it can prove itself by hitting that initial profit target, then by all means, you want to let that stop loosen up. So that's ATAI, $928, at least the time the snapshot opened, better than poking the eye. All right, now I want to show you something a guru has never shown you. And that would be a losing trade. So this thing took off nicely. It was a good looking setup. Nice little TKO kind of move. Look at this TKO. I feel like Tiny Elvis. Look at that TKO. It was huge. So that's the parameters, entry, stop, initial profit target. Shit happens, you know. So I got stopped out on that. 2000 in a model. Plus, again, I take this in other accounts. I take these trades in other accounts. So just getting an alert on Bitcoin. 121. That's no big deal. Anyway, so I get hit for more than 2,000. I'll tell you that. But if you want to see at least a $2,000 loss, I could show you that. And if you're interested in any of those other ones, I could show you too. So here, this one just triggered. So I just threw it into literally last few minutes. NUAI. It still looks pretty good where it is. In fact, oh, it's already taken off. Oh my God. See, and now I need to watch. So I need to watch for the profit target on that one. Is that number real? Wow. Holy crap. All right. So, well, it's too late to get in now, but that was going to be my mystery chart until it triggered. Now, 2 weeks ago, I talked about trading an ogre. I'd recommended 2 ogres on that day. The second one didn't pan out until later in the day, so I wasn't able to show it. So let me just show you real quick. This is BE. And this was the original ogre here. And I grabbed my trades earlier, but I didn't get them in at the last minute. I ended up with some technical difficulties. So I'll take a look at them next week. But I think it was the ogre +1 that actually worked out. And what's kind of interesting is it did an ogre +2, ogre +3, 4 type of move. So when I saw this big day here, I'm thinking maybe there's something there, because if something gaps down, okay, and it doesn't just come unglued and go all the way down here, okay, that's a different story altogether. And there's another chart I want to show you maybe next week where somebody played an ogre and the stock was up here, and I don't think it was even trending. It was like sideways or going lower, and it gaps down to way down here, and he played it, and it's like, that's not what an ogre is about. An ogre is you've got a trend and you've got a gap down in the trend or a TKO type of move, and then you got a gap down and you're trying to catch that kind of like ball being pushed underwater, because you have all this demand and coming behind you, right? And all of a sudden that stock gets hit. A lot of times, not all the times, a lot of times it goes straight back up. So the point I'm trying to make here is that the first day, not a whole lot happened. And I don't know if I played that first day or not. I'll check the trades. But on the second day, you had a pretty nice textbook opening gap reversal after an opening gap. Now, this one wasn't much of a gap, but the day before was. So I call that an ogre +1. You're kind of focused on the gap from the day before, okay? And you're looking to catch a reversal. So in a case like this, you get another little minor gap and you get a little bit of trading lower. Then when it begins to reverse, you can go in and play the trade. And I think the trades that I have are from this day here, but I'll show you those. And I think somebody, because I pointed out as the ogre +1, because it really didn't take out this high here. Okay, so this ogre is still valid on the following day, so it might be worth a shot. As I've said before, years ago, I was helping someone, and that's how I really learned how to pick stocks, watching him and then doing it on my own. And one thing, I would ghostwrite and pick stocks for him and all, but that's another story altogether. That's a 2-drink minimum story. But anyway, we had one client that said that this was back when we would fax out services. I don't know if anybody knows what a fax machine, but it's this thing, you put paper in it and it makes a little bit of noise, you know, and it goes, and somebody eventually gets it, and you grab the paper and it curls up, you know, and you pull it out, and you run over and make a copy of it if you have a copy machine, so you get a flat paper. And anyway, that's a fax machine for the, you know, I'm from the 1900s, so there's all kinds of things that you guys probably never heard of. But anyway, long story short, we had one guy on the fax service, is what we called it back then, that didn't trade the setups the day they were shown. Now these were intraday setups, okay? So this wasn't like position trading where you're gonna miss the trade or whatever for the position if you don't get in per the parameters. But anyway, long story endless, he would take the +1 trades and +2 trades. So he would literally get the service, turn it upside down, and then the next day he would turn it over. And that was a valuable lesson for me because something like on an intraday basis, like these ogres, they might not work on the first day, but keep an eye on them for day 2, okay, or ogre +1. And then maybe there's something there a little bit longer term, because this wide range bar here, that was the mother, that's a what, 10, 15 point day. God, can you imagine that? Just 100 shares on a day trade, $1,000. That's much better than the poke in the eye. But anyway, that's an ogre +1. This was the ogre from last week. Again, just you could, or 2 weeks ago. Again, you have the stock that's on a daily chart in a nice uptrend, gap down, then coming back a little bit. Anyway, this is not the intent this week. I just left this in just to show you what an ogre looks like. This is what I mentioned. I also mentioned the BE on the same day. Okay, let's get back there. So I'm not going to spend much time on Landry 100 this week just because of the technical difficulties, and there's so much other stuff to cover. I did want to show you that speculation is alive and well. Keep in mind, every one of these two. Oh, what's the IPT on that? Hang on, guys. I might have to take some action here. You know what? That's close enough for government work. Let's take some partials on that. Thank you, Jim. Jim's in the Facebook group. Paid off again. Thank you so much. Okay, let me just see what it is because I don't know off the top of my head. Wow. Okay. Holy crap. Stay there so I can get it out. There it is. Okay, the IPT was 295. Close enough. All right. So look, I'm practice what I preach. I'll be right back. I'm gonna go sell half of those shares because that's a 1 day move. Come on, gift horse. Be right back. Talk amongst yourselves. Yeah, that's a gift horse. Yeah, good job, Jim. Oh, thank you so much. I'll buy you a beer next time I see you. I don't know if we've met before in person. I don't think about it. I feel like I know you. All right. Thank you. Thank you. Thank you. Okay, so next week I'll show you that trade. I know I was a little early. Let me just see what happened in the model for you. Okay, got in 1395. Is that right? Okay, I went in at 2,400 shares in the model account at 205. Again, I'll get these trades for you next week. I bailed on half of that, so that's 1,200. And let's see, anyway, at 80, so 0.75, 0.75 times 1,200 equals, so that's $900 in the model account. We're looking for 1,000. You got that in one day, okay? Don't be greedy, just take it. Now, if I wasn't doing this presentation, what I might do is put in a trailing stop intraday on half of that, just in case it gets halted and goes to the moon or whatever. But you know what? I'm happy with that. Don't look a gift horse in the mouth. This is something like I'm thinking, oh man, what if it goes further? And I was like, no, don't even think that. Just take your money. Okay. Now, if you're sitting there watching it again, you could put in a trailing stop or whatever and make it work. So this is exciting to actually see this work in real time. It's been so crazy lately. It really has. And this won't last forever. Okay. I was thinking about taking down my banner ad because it's like, rest of the year, it looks like it could be rough sailing, and putting up something like, oh, it's great, and show all the winners, and that would probably be the end of it. Anyway, getting back to this, if you look at the dates in here, you might have to squint your eyes a little bit, but you can see these stocks. If you go in and look at like USAS, that's a gold and silver stock, on 428, you'll see that was a new 52-week closing high. Okay, that is the only parameters for the Landry 100. As they begin to fail, I take them out of the list or underperform. Okay, and then I put in stuff that's performing. So it's almost, as I've said before, a bit of a constant window dressing. Now, I don't actually trade these stocks per se, but if I'm going through the lists, I see that I'm long Cipher, I'm long ATAI. I might have some tiny positions that I experimented with and quite a few other of these. KGC, look, there's KGC right there. So you can see a lot of these actually are also in the portfolio. So having that momentum list to watch, and I publish this quite often, usually when I make changes to it, to the Facebook group. And also I have a Substack. If you're Substack, that I always forget the link. It was up there earlier, Substack.Dave Landry, I think. And I do publish this list there, but it's a great list to watch if I say so myself. All right, let's get through this. All right, I do have a minor trade I want to talk about, and it's going to dovetail. It started out as one of the million little things, and it will become a million little things over the next few weeks. But I thought it was important to kind of talk about it and flesh it out a little bit more. And when it comes to trading, there's nothing more and nothing less. You've got one job, okay? And you can't lose sight of that. And there's nothing more, nothing less. And your one job is to find a trend, hop on, and then hop off when it appears to be coming to an end, okay? Now, before we go any further, I'm not saying you want to be like the rat going for cocaine, hitting that little button over and over and over and over again. Okay, you want to take well-chosen trades, and with my methodology, the core methodology, you want to be sitting in those trades for a long time until stopped out, like the ones we just showed earlier, for months and months and months, and hopefully years. Okay, I saw a trader who I really respect, and maybe he could flesh it out a little bit further, but he was basically talking about how round trips you could really make a lot of money percentage wise, and he's right. Okay, so we just hit, or we came close to hitting the IPT and the NUAI, so that's a round trip. Okay, and if you do enough of those, especially if you catch the lower term winners, you'll do really well. But the problem a little bit with that thinking is you got to be careful to make sure you're following a solid methodology. And I think that was his point, is he's talking about his methodology, and you're not going in and out, in and out, in and out, in and out, okay? That in and out stuff is fun. Hope that sentence isn't taken out of context, but it's detrimental to you mentally and in the end, probably monetarily too. Now, I do take those occasional day trades, and I've got a couple day trades on now, but I try to resist the urge. And one thing that just kind of hit me like a ton of bricks yesterday was I backed way off of the day trading because it seems like it was just hurting my account, because all these position traders are doing so well. You know, why am I going to dick around for a few $100 here and there when everything else is doing so well? One thing that dawned on me yesterday is, and I told the story before, I have a doctor friend of mine, and we talk quite often about trading. We talked a lot yesterday and today. And anyway, a while back, I said, yes, boy, my back, my upper back, just like, it just hurts so bad when I day trade. Is there anything I can do for that? He goes, yeah, stop day trading. now he's way worse than me. He sucked me into a lot of day trading. Okay. So I'm admitting guilt here, but I'm back way off in that. And guess what? My back feels 1,000%. It's a little tight still. There's still some stress in my life, but there's not as much stress from that. And what I have found is that if I wait and wait and wait, like that BE, and I think it was U the week before, and occasionally an ETF here and there, okay? Especially if we were in a route lower or something, I might short some futures or whatever. But I try to minimize that trading. And the other thing I've done, and a lot of people say, first hour is amateur hour. Well, you can get a lot of good trades in the first hour as far as day trading is concerned. But I have learned there is something to that. You're probably better off letting everybody fight it out, and then maybe at the end of the day, take a little action. That's one of the things I still do at the end of the day, specifically, usually the last 20 minutes. I look for some moves to happen in the last 20 minutes. Options, for instance, zero DTE options can get fairly cheap. You got to be careful not to buy them just because they're cheap, but there are some things you do at your day. So long story endless, you don't want to be in and out like the rat going for cocaine. Mentally and monetarily, you cannot handle that. We're only wired to make so many decisions. Without going too far into it, and I imagine that me going off on a tangent, but there's a book called Limitless. I haven't finished it. He's got a lot of good information in there, but he spends a lot of time telling you what he's going to tell you. Just tell me. But he talks about the fact that I need to get my stats right, but the average person consumes more information, or is inundated, is probably a better way of putting it, in one day than a person 100 years ago did in their entire lifetime. And even going back 20 years and 30 years and 40 years, those numbers are pretty crazy too, about how much we're being inundated with. And so if you're adding in that day trading and all those decisions, each decision comes with emotions and stress. That's neurology. That's inescapable. You're going to put more and more pressure on yourself. So anyway, kind of a talking out of both sides of my mouth. But if you are going to do some day trading, make sure they're well chosen. Maybe take Russian dolls, okay, something that's set up looking pretty good. And of course, take ogres, but make sure it's like a setup in a trend, kind of like a gap down, and you're looking for that reversion to the mean type of move back in the direction of trend. So in theory, yes, maximizing the round trips, if each is conceptually correct and statistically valid, would make you the greatest amount of money. So if you did have some sort of edge that was much more active, and you were running that edge like the rat going for the cocaine, right? Then yeah, you'd make the most amount of money. That's a little bit of a fantasy type of thing, but with the longer term trend following, as you see with the service lately, and again, knock on wood, we had a good run. It's been great markets, but we've been doing what we're supposed to do, and we're finally profiting from it. I've bored so many clients to death by telling them not to do anything. But if I'm not going to put for months, okay, when there's nothing happened, but if I'm not going to put money into harm's way, why should you? Okay. And without going into details, as I've learned before, people crave action. It's like years ago when I wouldn't recommend anything. That was back in the trading markets days. The salesman would call me. He's like, Dave, you got to recommend something, because the salesman knew if I wasn't recommending anything, everybody quit, okay, because people want action. But if I recommended something and it failed miserably, we'd lose a client or two, but rarely nearly as much as by not recommending anything. So long story endless, I know people crave action. So that's one thing that I want to add to this segment too, is nothing more, nothing less. You got one job, but there's a lot of things that need to be added to this, like don't trade for recreation, don't trade when you're pissed off at your wife or your significant other or both. Now, here I say, in theory, yes, maximizing round trips, if each is conceptually correct and statistically valid, would make you the greatest amount of money. The problem is there's a lot of ifs in that sentence. So make sure you have a methodology that's well defined, okay, from a charting standpoint, from a money management standpoint, from a position management standpoint, then by all means, the most amount of trips will pay off. Now you can see the open portfolio, and it's actually looking a little bit better now than it was when the snapshot was taken. But this is the ultimate goal. Yeah. So if you can make a lot of these round trips, okay, then you're going to make the most amount of money. But this is a well-defined methodology. And again, we might go weeks and sometimes a month or more without any setups. And of course, my sales go to zero when that happens. And of course, everybody quits, and then we hit a wave like this. That's another one of those nuances, right? It's streaky. I've been told in the past, don't use that word. It sounds too elusive. Well, it can be elusive, but these are the ones that we have been waiting for, okay? So it can be done. So yeah, lots of round trips in the works, but it did take a lot of time and a shit ton of patience to get here. All right, getting back to your one job. Oh man, can I tell the story? My mother-in-law, she had a Mercedes, and anybody's owned a German car knows that they're great until they're not. And it wasn't like it was a classic or anything. And that's when these German cars are the worst. It's like they're not worth fixing. You know, you might as well just get rid of them. Anyway, she said it's in excellent shape, and she's trying to sell it. And we get over there, it's like it's dirty inside and out, and they got duct tape around the little door handle or whatever. And my wife, Valen, told me, Dave, you could fix that, can't you? I'm like, yeah, I guess so. And I guess I can tie this back to trading a little bit. And if you want to become mechanically inclined, believe me, I wasn't mechanically inclined years ago, but I'm very mechanically inclined now, to a point where all the neighbors come to me to fix, and friends and all, to fix stuff and for tools and everything else. I just spent a year and a half building a table, and I'll throw a picture in post. But anyway, long story endless. If you're going to take on a job, one way to become mechanically inclined, obviously you got YouTube now. I didn't have YouTube when I was learning all these things. But one thing you do is watch some YouTubes on it, okay? And look for the gotchas. So in trading, you need to look for the gotchas, okay? And that's important too. And a lot of people send me systems, and I'll tell them the gotchas, and they'll get upset, and I'll say, well, you know, okay, go ahead and trade that and come back in 2 years. Nobody's ever come back to me in 20-something years after 2 years of trading something where there's a lot of gotchas. So look for the gotchas. But I knew the gotcha of this job was that there was a point where everything's going to be taken apart, and if the door panel were to drop, it would rip out the electronics, and those electronics would cost thousands of dollars to replace, and the car was worth a few $1,000s, if that. So that would pretty much nearly total the car, you know. So my wife and I work really well together. There's a whole story about that. We curse at each other a lot, you know. Our nickname is the MF Contractors. That's another story too. But I explained to her the whole procedure and everything, and she goes, I'm going to let you do your thing. When you get to that point, you let me know. So I tell my wife, okay, we're ready. And right about that time, my brother-in-law showed up, and he's like, oh, well, he's here. He'll help you. So we get everything. I tell him what he has to do and everything. And so I'm making a little connection. I let go of everything. I'm making a little click connection, and son of a bitch, he drops the panel. And he's right here, literally right there, and I'm in the window, and I stick my head through the open window and hollered in his ear, you got one effing job. So anyway, luckily we were able to save it. But what was what's funny about the whole thing is after the fact, it's like his mom who revisited. She's like, oh yeah, when he was a kid, his nickname was Bam Bams because he just smashed and broke everything. So maybe not have him around if you're working on something, okay? Or maybe not have a distraction if you're trading. So getting back to your one job, find a trend. That's going to make no sense, will it? All right, so this is an older chart, but I figured it's worth showing. So here's a stock coming off of lows. I didn't even realize it was a coal company at the time. And you can see lots and lots of Landry light looking pretty good. Big blue arrow pointing higher. Persistency, something that I talk about, okay? Now hop on, except for like the Landry 100, that's hypothetical. So you don't just want to jump in midstream. And then with a few caveats, something like crypto, where you get a bull market every 6 weeks or so, you can just buy those new highs. At a Landry 100, if you're going to buy 100 stocks, yeah, you could just buy new highs. So hop on, but that's on the setup, okay? So here, the stock pulls back. It's a Landry light pullback, and the entry was there, okay? And you can go and look at the trading service on this. And then you want to hop off when it appears to be coming to an end. So this one we sold half, and then we rode this for a long time. Jeff, did you ever get? I don't know if Jeff's here today. Jeff, did you ever get stopped out on this one? Jeff adjusted for the dividend on this one. But anyway, the point I was making here is that this was like a 500% move, and it's kind of hard to hold it for weeks and months when you're underwater compared to where you were. But that's open profit drawdown. Again, like Mr. Dennis said, you have to just live with that. It comes to territory. So that's your one job. You got one job. Now, cash is not trash, okay? Stupid things that rhyme can get you to a lot of trouble in markets. Sell them and go away. I had the best summer of my life, probably, okay? I'll have to go in and look at it. But I'd be willing to bet I had the best summer of my life. If I'd have sold in May, I'd be hating life right now. Years ago, I had a client, we had a shitty summer, which it happens, right? Because the markets tend to be choppy. He goes, everyone knows you should sell in May and go away. I'm like, that's not exactly true. Cash is king, okay? Nothing wrong with cash. I got in that stock early. I put my capital in the harm's way, okay? Because I said I had to do it, right? The NUAI. And my goal is to get cash back as quickly as possible. Now, it might take weeks or months, right? Or I might get stopped out at a loss, as I just showed you. But ideally, you want that to happen as quickly as possible, and you want to put it back in your pocket. That's what I just did, and that's what Jim just did, and whoever else is following along, hopefully. So if it hasn't entered IPT yet, then it's close enough for government work. Go ahead and take it. So you want to work to increase it, okay? And then you want to sit on it, okay? And you want to make darn sure it's worth putting capital back into harm's way. And then, of course, rinse and repeat. Now, don't get too full of yourself. Like you can see, I'm kind of like, I've never seen Big Dave so excited. It's like, well, that French voice comes out now. I've got a dog and I speak French to it and it loves it, but it won't make any sense, believe me. But we have a little stuffed animal that Lyle the crocodile. For some reason, Lyle is French. He started out talking like Grover and then it became French. But Grover sounds very French if you listen to him. Is Grover French? Does anybody know? Anyway, once you start making a lot of money, you feel like you have the Midas touch, okay? I feel like I have the Midas touch because I was a little nervous buying this wild and crazy stock this morning, but it's like I had all this confidence behind me, It's like, but you got to be careful. And this is where you get into a lot of trouble because you will start to deal in mediocrity. All right, we're coming out. Who just got I just got a pop up. Somebody else just came out of NUAI. Good. Fantastic. This is 2 days running. Believe me, it's not always like this. So it's like I don't always have this Midas touch, okay? But this could go to your head. And this is the hardest part of trading, especially if early in your career you have a lot of success. I've seen so many people make a shit ton earlier in their career. I had one friend of mine made $1 million out of roughly $5,000 of questionable origin, and then he ended up homeless. Okay, died a miserable death. That's a wow, womp womp. That's a bummer. But he was. I remember telling him, I was like, Jimmy, he's like around Jimmy when he's around $1 million. I said, this was back when $1 million was still $1 million. This was, geez, was this in the? This was like early '90s, I think. I forget exactly when. But I said, Jimmy, I said, if you're that good, okay, sell everything, put the money in an annuity, and take out a salary. I think back then 50K would have been, especially his lifestyle, 50K would have been plenty enough to live on. I said, sell it, sell everything, get an annuity with about 50K, okay? And if you're that good, okay, if you're that good, keep out 50K or even 10K because you're that good, right? And parlay that. And he says, I'm not going to take financial advice from you. And I'm like, okay, fine, whatever. Because when he's at $1 million, I'm like, what's your plan here? He says, oh, when I get to 5 million, I'm going to buy a sailboat and live on. I'm like, okay, good luck with that. But you got to be careful when you have that Midas touch, because you can end up in mediocrity. And I just wrote an article recently. It should be on my website. It's also on Substack. Mediocrity is the greatest sin, and that's Anthony Bourdain who said that. And you don't want to deal in mediocrity. The way we got to where we are with the current portfolio, it doesn't always look like this. Believe me, if it did, you never see my fat ass again. I almost made a joke. That's a bad idea. But people forget how you get there, right? So the way we got here was carefully chosen setups, sitting on our hands a lot, waiting and waiting and waiting and waiting and waiting, not doing anything. And then finally, you get a nice bull trend comes along and you get some nice setups, and then you take them, okay? You got to be super careful. And we got another sold half. Fantastic. This is exciting to watch this in real time. You guys have no idea. I've never really done this before. This is so much fun. The pop-ups never came up before, so I'm getting a lot of pop-ups from this. This is great. Yeah. Oh, whew. Thank you, God, and thank you guys for all your kind words. Appreciate that. But anyway, again, you got to be really careful, especially when you think you have that Midas touch, because you can get in a lot of trouble. And as I've said 1,000 times, again, I need some new material, but it's all relevant. It's hard to, not tell the same old stories again. But when you have that initial success, especially, okay, if you get your ass handed to you for 3 or 4 years and you don't give up, you're going to be successful. I guarantee that. And there's been a lot of people have said this a lot more eloquently than I'm going to say it now. Your early success or failure is not a predictor of future success or failure. And I've seen people quit profitable businesses, tell the boss to F off, quit his job, and die from alcoholism. In one case, womp womp again. So you got to be really careful. But you think about your equity curve and your ego, and when your equity curve is going down, and it does for a while, your ego goes down and goes down and goes down, and it overshoots it quite a bit. You get pretty distraught, pretty depressed, pretty bummed out, okay? And then when that equity begins to increase, like right here, all of a sudden you think you're God again, and your ego just shoots higher. And that's when, right around here is where you start dealing with mediocrity. You're lottery rich, right? You're sitting on this big pile of cash you just made, and you just want to go out and fritter it away because I'm Dave Landry, or, I'm whoever you are, and you're making all this money. So this is very important to not let it go to your head in good times. And then, don't get too bummed out in bad times. And the thing is, again, how did you get here? You got here, at least this peak of this equity curve, right? through carefully well-chosen setups, through proper money management, through not splitting hairs and taking partial profits, and all these things I preach every day, every day. So always ask yourself, how do you get there? And then make sure you keep doing what you're doing. Now, it takes a shit ton of discipline, especially patience, okay? You didn't shoot everything that moves under the guise of hunting outliers. Our money is made on the occasional outliers, okay? That's where the real money is. That 100, we've got one that's up 150%, and hopefully next year, this time, we're up 250% or 350%, and so on and so forth. But that was a carefully chosen setup. And if you go back and look at any one of these setups, and if you want to pick them apart, please do and let me know and tell me, like, Dave, you should have taken this for whatever reason. But everything that I preach was in all of these setups, okay? And again, I don't want to temper your expectations too much, but they don't come along every day. And you're going to spend a lot of time sitting on your hands with me. And you know what? That's as valuable as the actual setups when they finally come along. Because if you lose all your money on crappy setups or mediocre setups at best, and in addition to that, you're mentally not going to be prepared. Mental capital gets used up. Discipline gets used up. I was telling a guy today in the gym, a while back before I met these guys, or these guys invited me over to work out, I would say, I'm going to go work out today, but I'm going to work hard all day. And at the end of the day, I'm going to go work out. Well, at the end of the day, I'm tired, I'm pissed off or whatever. And it's like, you know what? I don't feel like going to work out. I've never worked out at the end of the day, maybe once, okay? But if I wake up and go, I can go. And that's because discipline gets used up. And Scott Adams, what's his book? How to Fail at Everything and Still Succeed, or something like that. Good book. I definitely would recommend you read that. It's under books to read, davelandry.com/books-to-read. He talks a lot about discipline getting used up, and that's something very important to talk about. All right, let's shift gears. Let's talk about crypto. And if you guys have any questions about anything thus far, I know I'm rambling, but there's a lot happening here. Okay. Let's get this shared. Okay. So here's one I bought a few days ago. In crypto, like I said earlier, sometimes you can just buy the things that are going up, okay, when the market's really moving, and you could use Bitcoin as your bellwether for that, okay. But you can see this one's taken off nicely in here. And again, you can't just buy new highs and breakouts unless you're buying a lot of them. And the other time you can do it is occasionally when something like these shit coins are just going straight up. And again, that bull market comes along every now and then. So let's take a look at a couple of these, and then if there's any crypto pairs you guys want to talk about, let me know. Bitcoin's a bit of a disappointment. We made, I don't know if that was all-time highs. Yeah, not too long ago. And we've come back in. So I'd like to see it break out and not look back for a while. Ethereum, if I could find it. Where is it? So Ethereum, it's kind of stuck around that 30 EMA. So let's see if we could bring it up in ACP real quick. So if you take a look at the Landry light on this one, you could see it was green, there was none, it was green, it was red, it was green, kind of a Jackie Mason market. And of course, you could always draw a sideways arrow. So that's sideways, and maybe it's going to build a base to launch into space, or maybe not, but there's no need to do anything there because it's trading sideways. What's your one job? Find a trend, okay? That's not a trend. So for that and for Bitcoin, I'd like to see brand new highs and see it stay there for a while, then maybe look to play some pullbacks. And again, sometimes when these things are running, you could just look at it. See, this is Aliche is up, what's that, 50% today. Now, maybe if I saw it when it was up 30%, I would have jumped on. That's a stock. Let's see. So yeah, I'm not seeing anything. That Z coin caught my eye a couple days ago. But sometimes when they're really blowing and going, useless, I'm in this one. Yeah, we just talked about this one. This is the IPT. So free rolling on that one. I haven't done a tremendous amount of crypto lately. It hasn't been fantastic. But that's another case of discipline, okay? I'm so busy with all this other stuff going on. I need to remember to take a look at the crypto. All right, you guys want to look at any pairs? All right, let's shift gears and hop over to stocks real quick. And if you have any questions, anything, if there's any individual stocks that you guys want to look at, let me know real quick. I'll just run through the markets real quick. Then we'll wrap it up. All right, come on, data feed. All right. Oh, look at that. What was that? NUAI 295. Yeah, okay. So we officially hit the profit target on that one. Okay. Dave, where can I see these ahead of time? Oh, I'm glad you asked. DaveLandry.com/trading service. Here's a Landry 100. Let's just see what's happening here. So you can see there's a couple that are up nicely today. But sometimes these numbers are a little bit bigger. Let's take a look at the overall market and drill down a little bit. And see, I have no regrets that no regrets buying or selling that position, even though it's higher now, because it was kind of a gift horse situation. And there's different ways of looking at it. Your first loaf is getting some money, hopefully fast money. Okay, that money in one day, that's a gift horse. KYTX the day before. Okay, that doesn't always happen, and when it does, you've got to take your money. Okay. Now, I'm not saying take $100 profit when you look for 1,000, but if you're up $800 or $900 in one day, that's a gift horse. Take it, and then you always have that second loaf to hang on to. All right, the P's are getting whacked a little today. They've been on a run. We're probably due for a correction here. I'd like to see them accelerate higher and then have some orderly pullbacks, but we'll get it to chop around a little bit today, so we'll see what happens. NASDAQ down a little bit. It's not the end of the world. The Rusty 2000 finally made it back to all-time highs. Took forever, right? I'd like to see some more acceleration here. It kind of took off, and then it kind of meandered. Still working higher, still in an uptrend, okay? But I'd like to see a more impressive uptrend there. Let's take a look at some sectors. Metals and mining hit all-time highs earlier. We're along what? KGC, TFPM, that we just talked about. And now it's coming back in a little bit. I mean, come on, trees don't grow to the sky. This is going to correct. We're going to give up some open profits. I know it sucks, but because of the territory, said Mr. Dennis. Gold to commodity, a bit of a TKO type of move today. Gold stocks, same sort of thing. We could see some setups, quite a few setups fairly quickly. Lithium just off of these brand new highs. It's been blowing and going. Platinum, palladium has been pretty amazing today, notwithstanding getting whacked a little bit. Silver, look at that. That kind of looks like an exhaustion type of outside day. I wouldn't call a top because it's still going up, but definitely some FOMO happening here. This is FOMO when people are buying into a gap that high, okay? They're getting sucked in and spit out. You'll get a TKO move sometimes like this or after this, and then that'll knock out some people, and then that could clear the way for it to trade higher. So most of these metals looking pretty good today, notwithstanding. Defense has been looking pretty good. Again, today, notwithstanding, outside day down, we're due for a little pain, right? We're due for a pullback. Healthy for the market, painful on an individual basis, right? Financials have been kind of stuck in a range. I sure would like to see them break out and not look back for a while. Pot stocks have been doing great, brand new highs today. TLRY was in my, I am long TLRY, full disclosure. That was in a Landry list a while back, probably on, and one of my clients bought a bunch of options on it. He told me he did really well. I think that was like way back here because I'm up 100 something percent on that one. So not that you want to rush out and buy these crazy volatile stocks, but it was on the radar and I decided to take it, just FYI. But that wasn't something that was, it was on the Landry list, but it wasn't a direct recommendation. But since a client took it, it's like, okay, well, I can talk about it. You know, all the other ones were direct recommendations like the NUAI earlier. Anyway, most areas looking pretty good. Some of these areas that were kind of just all over the place have come back lately. It's good to see some of these sectors wake up, like drugs, for instance, health services, XLV, you can see beginning to wake up again. I wouldn't rush out and buy them, but they're certainly improving, and that's certainly and obviously a good thing. Robotics and AI, just off of multi-year highs, that's looking pretty good. So far, so good. Again, we'll probably see some corrective action. We'll have to see what happens next. I'm a man on the street kind of guy. A friend of mine in the gym, despite my preachings and teachings, he sold all of his Russell 2000 the last time it hit the old highs. And I said, hang on to it. It's going in the right direction. Turns out he was right. Okay. But I'd be willing to bet that he did not get back in. Okay. I'd be willing to bet good money he didn't get back in. And that's the problem. It's like you don't want to sell something that's on its way up. I actually did a presentation on that a while back. But that's when the general public sells stocks, by the way. People don't sell on the way down. I was thinking about that earlier today. They don't sell on the way down unless the pain hits them. They get margin calls or they got to pay bills or realize their retirement's getting decimated. Then they begin to sell stocks. But in general, people sell on the way up. Human nature never changes, okay? And that we could use that to our advantage. But this gentleman I'm talking about, he sold when this thing's making new highs. And now that's or was banging out new highs a little bit bigger, I doubt very seriously that he got back in. I'm not going to ask him. I don't want to pour salt in his wounds or anything. But anyway, most areas looking pretty good. Some areas picking up. You get the idea. So any questions, any thoughts? I know I'm going long. Chief Orman really wound up today. Well, while we're in impasse, I want to thank everybody for attending. I appreciate you taking time out of busy schedule. Thanks for coming. Sorry I do such a shitty job getting the word out. dailylandry.com/webinar, and you can sign up. And as I add, because like somebody signed up the other day, it's like, well, the webinar's not till 2026. It's like, okay, I put a slot way out here so I can keep using the same link each week. So usually I probably only get around to adding the webinar like an hour or two before. So even if you see a webinar going out to 2026, sign up for that and you'll get the new webinars as they go. And one day I'll do a good job of promoting this. Anyway, that's it for today. Everybody have a great day. Everybody have a great weekend. All you guys in Facebook, I'll see you in a little while. And of course, may the trend be with you. Thank you so much. You're welcome. You're welcome. Thank you.